Well, some more big news with inflation. Let's jump right into it. The Fed has made it very clear that they want to continue to combat inflation, and we're probably looking at one more Fed rate hike at least. But to kind of dive into the numbers a little bit deeper, there's headline inflation and then there's core inflation. It is core inflation that the Fed is very focused on, and they've made it clear that they want that number to be 2%. So we're at 4.8, down from 5.3 year over year. And so we've got a ways to go, and they're almost certainly going to raise rates once, if not, more times. That's not the point of this particular presentation, but I wanted to kind of highlight a couple things that are really interesting and how it impacts mortgage rates and just the market in general. So for the core inflation, there's various components and different things that go into it. Shelter is the single largest component by itself, and so when we look at that, it's down year over year, from 8% to 7.8. But what is interesting when you look at it kind of in a different context, and why this is somewhat problematic because the Fed just continues to use some old data. The blue line represents what CoreLogic, which is kind of a company that tracks a lot of important stuff. They said this is what the blended rent year over year change percentage looks like. So we can see during the pandemic times that just kind of skyrocketed. Okay, well then now it's been starting to come down, but the CPI shelter year over year change has also kind of tracked it, but now it's trending downward as well. The whole point of this is it's pointing down. The single biggest component of core inflation that they're measuring is trending downwards, yet they don't seem to be seeing this. Now, what we see in the marketplace, this is just a quick review of kind of what we're seeing with mortgage-backed securities, because this is what drives everything. I've shown this chart several times. Kind of in the June time frame, we were generally kind of trading in this nice range, and then we saw this big swipe down the week of July 4th because ADP came out with a jobs report that was different than expected, and there was just some other data that made everyone think, oh my gosh, maybe inflation's not under control. The market's kind of freaked out. Rates went up into the kind of lower 7% range, but with this most recent data that we've seen come out on core and headline inflation, we've seen those rates kind of come back. Remember that the direction of these numbers is inversely related to the direction of mortgage rates. So interesting stuff. News is we appear to be pointed in the right direction for mortgage rates. The national average is, in the upper sixes, so we're going to hope that continues to come down. We've certainly got, hopefully, some tailwinds behind us. So wanted to present this information because, again, a lot of times it's not reported correctly, and our job is to make sure you have peace of mind and know what's going on. Thanks so much.